All right, traders, I get asked all the time about day trading, and I normally deter people away from day trading because it's an advanced strategy. But because I get so many questions about it, what I'm going to do is I'm going to share with you my favorite techniques for day trading. It's a technique that I don't hear anyone else talking about, and I had a great time trading this in my short career of trading it, and I'll explain why it was short in just a moment. But I've just started bringing this back into my day trading, and you're going to absolutely love it. Now, I don't hear anyone else talking about this technique, so it's going to be new to many people watching this, and I'm also going to share with you a strategy that you can actually go and use straight away, and I'm going to show you some of the opportunities that we had in this morning's live trading session. So let's get stuck in. The technique and strategy I'm going to show you is using range bars. Now, you might not have heard of range bars, so what I need to do first is explain what range bars are, because you'll see all these gurus and fake scammers and fake traders online trying to teach you some scalping system, and they'll be on the 1 minute chart, and it's ridiculous. What I'm going to show you here is something that you can actually apply and you can actually get really good at, and I'm going to prove that to you in just a moment. So what are range bars? Well, unlike regular candles, you know, we've got the regular candlestick, and regular candlesticks are time-based. So depending on what chart you're on, you'll have a red or a green candle, or whatever colors you've decided to make your candles. And we all know that we have an open, right, a close, and we have the high, and we have the low, right? And in the case of a red candle, or a down candle, a bearish candle, you're going to have the close down here, right? The open up here, and then you're going to have the high and the low, right? So it's very simple. We understand the anatomy of those candlesticks. Now with range bars, it's not time-based, it's movement-based. So that means that if you're on a 8 range bar chart, it means that every candle represents 8 pips in movement in whatever direction it goes in. Okay, so what that means is you could potentially have 10 bars in 5 seconds if you're on the 8 range or the 5 range, or you could have 2 bars in 10 minutes, right? So it's not time-based, it's volume-based, it's movement-based. So what you'll see is this will be 8 pips of movement instead of 1 hour or 15 minutes, and where this candle will represent whatever chart you're on that session in time. Now, the great thing about range bar trading is you get some really nice harmonic trends, and you can catch multiple moves in a very short period of time. So I'm going to dive into the charts now. I'm going to show you what I was looking at this morning, and I think you'll be blown away. I'm going to actually give you a strategy that you can go and take from here and apply it in your trading. All right, so what you're looking at is the range bar chart on the dollar yen. Now, the dollar yen is one of my favorite pairs to trade this on because it's just great for this strategy, this technique. And with the dollar yen on price, normal kind of time frame based price charts, it doesn't move like the other pairs when it comes to trend continuation. You don't get the nice ebbs and flows on this particular market. So looking at range bars, it gives you a really clear indication of what price is actually doing. And you get these nice harmonic trending moves, as you can see on the chart here. It's really easy to identify. So each of these candles represents 8 pips in movement in price, up or down, depending on whether it's red or green. And the way you get to the range bar charts is if you're using TradingView, which I love TradingView personally, but down the bottom you'll see the range bars. Okay, so you've got 5, 8, 10. I personally like the 8, and the reason I like the 8 is because of the style of setup that I'm using here. I'm looking for more of an extension. I like a bit more movement, but I don't want too much. I want to get active. I want activity. This is day trading, right? I want to come in, make a load of money, and then be done within like 20 minutes, half hour. That's all I want to be spending on this, right? So this allows me to do that, and I'll show you what we're looking at right now. So I trade from about 7:30 in the morning, UK time, for about an hour. All right. Now, am I trading that whole hour? Usually not. I'm just doing bits and pieces, having coffee, talking to some of my tier 1 members in my live room and things like that, right? But about 7:30, it all kicks off, and then we kind of talk for a bit, and then we get stuck into the charts. And the first opportunity that you can see this morning, this is this morning's chart. You can go and check this out yourself. And this is the first opportunity right here. So first, you have to identify trends. You have to know when there's a run, when there's a pullback, and we're looking for pullbacks. Okay, so if we're looking for continuations, we're looking for pullbacks. And the two things to note here are this candle here, right? And what we're looking for is the pullback, and then we're looking for a lower low, lower close candle, right? Now, the reason this candle down here is important is because this lower close is what signifies a new low in the trend. So if you look historically left, this is the new low from that trend. Once we get that new low, we look for the pullback, and then we look for a lower low, lower close candle. So you can see this one closed higher. This one is the highest, and then this one closed lower than the predecessor, the previous candle, okay? So this is our entry signal. And all we do is, as soon as that candle's printed, is we place an at-market order. The stops go 1 pip above the high of this highest candle, okay? So we was at 48, so 49 is where the stop loss. And then the target just goes at the high of this candle, okay? So the open of this candle which made the new low, the lowest close. And you can see that's a 2.3 to 1 reward to risk profile. Perfect, okay? That's one trade down. Risking 1% per trade, that's almost 2.5% on that one trade. And by the way, we entered this on 8:02, and we was out by this candle here, which was let's say 8:03, so within a minute. Okay, so most traders who are trading the minute time frames, they're just gambling, guys. That's what you have to understand. And you see it, you see them do their thing, and you can't really get a clear indication of what price is doing. With this, you can. It's quite clear what's happening here, right? And then we can prepare for the next one. Now, you might think, oh, there's another one here, right? But there's not another one here. And the reason there's not another one here is because once we've taken the trade, unless you're shooting for multiple targets and you're doing it, extension-based trading, trend-following trading, which I don't like to do in any sort of day trading, what we're looking for now is a new low, okay? So basically, this low here set the previous low. Now we're looking for a new low, so we're looking for a break and close below, and we got one right here. So as soon as we get this, we look for a pullback, and we look for that new signal, all right? Now, let me just thicken this up a bit so you can see nice and clearly. This was the next one, right? So let me just delete that off. So we got our new break and close here. So we had the run, okay? We got the run into the new low, new close, and the lowest low, lowest close was here. And then what we're doing is we're waiting for a pullback. So we got the pullback, got the lower low, lower close candle here, right? Entered, bang. Stop loss goes 1 tick above the highest higher candle, which is this one right here, 144.41. So 144.42 is the stop loss, and then the target goes at the lowest close. Now you can see this one, depending on your rules, it's an inverse reward to risk profile. So I wouldn't be able to take this one personally, but some people do, all right, because the strike rate's pretty high. But I personally can't take that one, so you stay out of that one. And now what we're looking for is the next new low. Then we have a little bit of consolidation, we violate structure and all this kind of stuff, right? And then we put in our new low right down here. So we've got our new low right here. I'll show you a few more, just so you get it. Let me know in the comments if you're getting it. We put in our new low, we wait for the pullback. Now, you can see right here that we had a lower low, lower close candle. But again, when you weigh up the reward to risk profile on this one, it just wasn't worth it. It didn't meet my rules. So if the stop loss was at 37 and the target was at the high of that red candle, it's inverse reward to risk. So can't take that one. So we have to wait a little bit longer. Okay. Again, we have to wait for the next setup. So right here, we have our new low, lower low, lower close. We push up. This time we get a lower low, lower close candle right here. Stop loss is going above the highest high. So we was at 144.36. That goes at 137, and the target goes, I think this one was bang on a 1-to-1 for me. So it was bang on a 1-to-1. Was allowed to take this one, got in the trade. That's another 1%, right? So we're up almost just under 6.5%, and we've been trading for 16 minutes, 15 minutes, 16 minutes, and that's a true 6.5%, demonstrated in front of your eyes there. I can't warp this stuff. I can't make it up. I can't frig the charts. you're actually seeing it in real time. All right. So then we wait again, we get another one. Okay, we push back up, and this was the last trade of the session, but we got up, we pushed up, and we had our lower low, lower close right here. Stop loss went 1 pip above this high, which was up at 33. Okay, and the target was right down here at this red low, and that one was a 1.7 to 1. Okay, so we risked 1% and we gained 1.7%. That's now put us up almost at 8%, the best part of 8% on the trading session, and that's where we stopped. But you can see if you kept going, you would have had many more, right? And look, you had one here, and new low here, right? Wait for the outside return. And yes, there's going to be a couple of losers, but not bad. For 20 minutes trading, that is literally 20 minutes exactly to get almost an 8% return. But the most beautiful thing is it's so simple. It's so easy to trade as long as you know what you're looking for and you know the rules of engagement into this. I love trading this style. Now, that brings me back to what I said earlier about my short career. There was a period in 2016 where I was just trading range bars, and I was trading on 4 pairs. And the thing with range bars is you need absolute focus. As you can see, it moves quick. We were taking trades within 1 minute, 2 minutes. And it moves really, really quick. And what you don't want to do is be distracted or have any distractions whatsoever. So when I started to do YouTube and talk to other people in my live trading sessions, what I found is I was becoming distracted. And because I was making money doing other strategies, I decided to part ways or park them on the shelf for the time being. And I never really got back to them. I still traded some day trading strategies like my force move and my velocity trades that I teach in my elite trader in tier 1, but I left range bars and I'm just bringing them back into my trading right now. And what a great session to kick off with. So some considerations if you're looking to trade a strategy like this is 1, the focus, obviously. 2, you still have to identify trends. You have to be able to understand the anatomy of candles and trend continuation recognition and things like that, new lows, pullbacks, outside returns, runs, all the rest of it. And the other consideration is there's a lot of noise, okay? And if you're brand new to trading, I highly recommend you don't start with anything like this. It's a bit like picking up a guitar for the first time and trying to shred the neck like you're Slash. It's really not going to happen. You need to build muscle memory. You need to build foundations. You need to build a skill on a higher time frame where there's not as much noise, and then you can apply the skill to the lower time frames once that's all subconscious. You know, when you get in your car and you drive from A to B, chances are you're not really thinking about the driving too much because you're unconsciously competent at that point. Whereas that's where you want to be with trading before you consider day trading. Otherwise, you'll just blow your account. And please don't listen to all those scalpers out there telling you can make money scalping on the 1 minute charts, because most of them, just assume most of them are fake. Most of them are scams, and they're not making money doing that, I promise you. So if this is of interest to you and it's really lit you up a little bit, you know, we've got a whole module on day trading where we include range bars in detail in tier 1 trading. So go and check that out if you're interested. And until next time, good luck in the markets, and I'll see you in the next one.